Welcome back again to Cattle Call. I'm Susan Littlefield here on the Rural Radio Network. We can say it's been kind of a quiet week as we head into the midweek of us doing this show, but some interesting things. There's some hunger out there, not only hunger from the consumer side, it's hunger from the packer side. So because they're hungry, are they going to pay up some dough? We'll have to find out as we talk about what's happening in the cattle market. As you can see, Brad Kooima joins me. He is with Kooima and Varlick out of Sioux Center, Iowa. So really, as you were saying, it has been pretty quiet on a midweek.
That sure was today, especially. My goodness. But I would say the pattern of the trade I thought was encouraging, Susan. Yesterday we had October cattle had 15 consecutive up days. Yesterday we had a little bit of a sell off. Okay, which, as overbought as we are, I don't think should be, real distressing to anyone. I think the market was due to have a bit of a correction. So today, then lower for a little bit, hour and a half this morning, and then to come back and close to the plus side on all the months except the October was, I thought, a nice day. Closed a dime from the low, a dime from the highs, nickel dime from the highs, and up 25, 30, 35 cents. So a market that I still, certainly by definition, would still be very much in an uptrending market. The October, a little weaker today, but I thought that probably was due to basis considerations, largely because there was a handful of deliveries posted yesterday. Those are the first deliveries, Susan, this month, down in that same spot that they seem to like to deliver at, Tulia, Texas, rather. So if you were long and there's not very many of us, many left in that contract, you sold some of your cases just because you didn't want to catch delivery. But we'll see what the cash how it develops this week. Last week it was 148 in the South. I think they'll do better than that. I'm optimistic that the cash in the North too is going to be better.
And is that because there's just such a demand right now for these cattle?
Demand for cattle generally, but specifically and especially demand for cattle that'll grade. Choice select spread remains way out there, $34 or something like that. Would tell you that, which is very, very, very contra-seasonal for this time of year. Normally we have all kinds of choice cattle, but because of the cost of gain and various other things, I think mainly the cost of gain, we're selling these cattle ahead of time, and the cattle don't have much grade, but the packer needs to find some choice cattle, and where he can find them, I think he's going to have to pay up for them.
And is that those cattle going to come out of the North, or is there going to be pressure to get some moving out of the South?
Well, there's some of us here that have been bid cattle in the North to get exported down to Kansas. Short answer, North is where the grade's going to come from. And as witnessed by some of these packers willing to buy cattle and haul them all the way down there. That's, the type and kind of the cattle we feed here, and the fact that as high as corn is here, it's maybe $1 or $1.25, $1.50 a bushel higher even down there. So, they're going to really, really struggle to try to put any extra days on cattle down there because the cost of gain is just too prohibitive.
So looking at the midweek, obviously we had a cattle on feed report last Friday, and as you and I talked earlier in the week, not a lot of big influence on the trade this week.
No, there wasn't. Although at least it wasn't bearish, and it did show a placement number that was 4% less than a year ago. So we finally seem to have rode over that bump now of having all those extra placements, and that's largely still because of the dry conditions in areas, right? A couple of things that I did thought was a bit interesting was the placements in Texas and Kansas, both sharply lower. In fact, the number of cattle on feed in Kansas is 7% less than a year ago. Let's monitor that situation. I know this is, falls under the category, I guess, of one robin doesn't make it spring, but I don't know how the South, if the cost of gain stays like it is and the cost of all these inputs stays the way it is, I think it's going to be pretty tough for them to compete with the northern trade, and also our ability to source distillers and byproduct, stuff like that. So it'll be interesting to see. We may be going through a little transition here the next 2 to 5 years here in the cattle business, and why not bring it back up here, right?
Is there the pressure out there? I mean, obviously we're getting to the point now where we have to make that decision. Do we keep these heifers as replacement, or do we send them to the feedlot, not knowing what feed we're going to have come midwinter?
Well, you just asked the billion or $1 trillion question. Yeah, that's the tipping point. You can look back in the 2014 big bull market of our career. where that you got to the point where it finally started to rain at the end of 2012, right? And then they started to retain heifers. When you look at the female slaughter this year, it's a record. When you combine just the cow slaughter is a record by itself, but when you combine the percentage of heifers that were killing compared to steers, it's crazy. I would say north and southeast probably have had enough improvement that they're going to see some retention. It's the South. It's like that wheat belt of West Texas, of Kansas, and stuff like that. Now they've had some rain, but it takes more than a little bit when you're as depleted as they are. That's the area that I'm kind of drilled in on and watching very, very closely to see what they want to. I mean, this is this guy's livelihood. They can't just keep killing cows and expect to still be a rancher, right? So I think the next 60 days are going to tell us a lot about that. I don't think you're going to have that massive retention like they flipped the switch in 2012, because there's just not enough moisture in some of these areas. Even some pockets of the north aren't that great yet, although they're much better than they were a year ago.
Something we also talked about earlier this week when you were on the Fontenelle Final Bell with me was November's next week. And having said that, the major headlines talking in mainstream media about higher turkey prices. So good place for beef to step in and say, hey, you don't have to serve turkey on Thanksgiving.
No, be a great lobby, wouldn't it? I think that, not to overcomplicate this thing, certainly you're going to get the seasonal normal deal here where we see an uptick in turkey. Interestingly, we don't see that like we used to in the hams. The ham market's really gotten to be difficult, almost a byproduct type market here, as much as we are killing hogs for the loin and for the bacon. But the I think maybe seeks a broader answer. We're going to eat Thanksgiving turkey, right? And yet I think the industry is smart enough that they can anticipate that. What I find kind of interesting when you're talking a demand question is it would seem to more than just me that we have shifted the general demand thing to where you seem to have a segment of our populace who's in a spot in the economy where they are happy. They want to buy a middle meat cut. They're going to buy a ribeye unless it's $20, and they're going to buy strips. And it's probably because of what's changing economically on the socioeconomic ladder, where right or wrong, you're getting a bigger part of it on the upper middle class thing. But that and the shift that you saw when we had the COVID impact, where we moved about 8 or 10% of beef consumption back into the buy it from Fairway crowd, not have to go to a restaurant to get it. Found out they could cook it on their own pretty good. In fact, maybe even better. And they could do it twice a week instead of once when they go out to eat. So that shift has been interesting to watch, and it's still very much alive. Our domestic demand is tremendous.
All right. Well, next time we get together, we'll have to swap some Halloween grilling stories or something fun. Enjoy the rest of your...
That sounds good. Scary, right?
Yeah, there we go. Enjoy the rest of your week. Brad Kooima has been joining us today. As we always remind folks, commodity futures and options do involve a substantial risk of loss, not suitable to all investors. And that's this week's Cattle Call on the Rural Radio Network.